See, last week we have started interest calculations, and somebody says that last week recording, the recording on Sunday is not properly working, right? So let me check it out because I was a little busy last week. So let me check it out, and if the problem is there with the recording, I will send the recording from another batch for the same topic. One second. See, last week we have started interest calculations, and I think we have done up to step number 3 in the interest calculations. Define reference interest rate. Can anybody tell me what is the reference rate of interest we have defined? Because you are writing in the material, no? What is the reference rate of interest identification you have done? We have given in the last week. Interest indicator we have given 3.6, right? What is the reference rate of interest we have given? Giri, you are writing in the material, right? Can you tell me what is the identification you have given? Okay. Anybody? Yeah, 12% identification. Identification. Tejasvi. For 12%, what is the identification you have given? A6. Okay, that's fine. Now, define time dependent terms. So first I will explain what is the meaning of the time dependent terms. See, let me change the dates. See, for example, we have taken one term loan from State Bank of India, right? So we have taken the term loan from State Bank of India on 1/1/2016. So when you take the term loan, the entry we post is bank account data to SBI term loan account. So by virtue of that entry, that is posted to the credit side of SBI term loan account. Let us say we have taken the term loan 1 lakh. Then every month, let us assume, every month, right, the installment is 10,000 and that is to be paid on first of every month. So on 1st February 2016, we have paid the first installment. When you pay the installment, the entry posted is SBI term loan account data to bank or cash account. So with the help of that entry, that is posted to debit side of the SBI term loan account, 10,000. Okay, so we are paying the rate of interest at 12% on the term loan. So assuming that these are only the two business transactions in the term loan account, I want to calculate interest from 1st January 2016 to 31st December 2016. So how do we calculate the interest in the normal way? We have taken the loan on 1/1/2016, 1 lakh, and we have paid 10,000. We have repaid 10,000 on 1st February 2016. So from 1st January 2016 to 31st January 2016, that is for 1 month. how much you have used from the bank? 1 lakh, right? Because you have repaid on 1st February 10,000. So for the month of January, we have used 1 lakh from the bank. That's why on 1 lakh for 1 month, we have to pay interest. 1 lakh into 1 by 12. 1 month of 12 months and 12 by 100. 12 by 100 is the rate of interest. So 1000. Then on 1st February 2016, you have repaid 10,000. Means from 1st February 2016 to 31st March, December 2016, we have used 90,000 from the bank, right? So on 90,000 for 11 months, February to December, on 11 months, we have to pay interest. 90,000 into 11 by 12 into 12 by 100, which comes to 9,900. So total amount of interest you have to pay is 10,900. Now, SAP calculates the interest in a different way. Here, the term loan account is very similar to bank account. So in the bank account, all the credits are withdrawals and all the debits are deposits. So on the withdrawals, we have to pay interest, and on the deposits means debit items, we have to receive the interest, right? So based on that fact, we have withdrawn 1 lakh on 1/1/2016. So from 1st January 2016 to 31st December 2016, we have to pay interest for 12 months on 1 lakh. So on 1 lakh for 12 months, 1 lakh into 12 by 12 into 12 by 100, which comes to $12,000 or rupees. So this amount of 12,000 you have to pay to the bank. To pay means expense, right? We have to pay expense, right? So expense means debit, because according to nominal account principle, debit all expenses. That's why SAP calls this as debit interest. Okay, now I hope till now it is clear to everybody. Now, on 1st February 2016, you have repaid 10,000. We have repaid 10,000. So, means you have deposited 10,000 into the bank. So, on the deposits, we have to receive the interest, right? So, from 1st February 2016 to 31st December 2016, that is for 11 months, we have to receive the interest on 10,000. So on 10,000 for 11 months, 10,000 into 11 by 12 into 12 by 100, which comes to 1100. So $1,100 interest you have to receive. To receive means revenue. According to nominal account principle, credit all revenues, right? So SAP calls this as credit interest. So in simple words, you have to pay $12,000 and you have to receive 1100. So what is the net amount you have to pay? Same, 10,900. There isn't any difference between the amount of interest, whatever the method we use. But SAP calculates the interest separately on credit items and debit items. That is the fact in SAP, right? So why so? Here, at the time of calculating interest, right, the bankers will charge the interest on credit items and they allow the interest on repayments. Generally, on the credit items and debit items, they charge the same rate of interest. Sometimes it may be necessary to charge a separate rate of interest on credit items to allow a separate rate of interest on debit items. Suppose, for example, the banks are charging 12% on credit items. Then they are allowing 11% on the repayments. In that case, there should be the facility to use separate rate of interest on debit items and credit items, right? So if that is the case, for the debit interest, reference rate of interest EA6. We assign reference rate of interest EA6. And for the credit interest, that is on interest on the debit items, we can assign A7 reference rate of interest 11%. So in order to facilitate to use the separate rate of interest on debit items and credit items, SAP calculates the interest separately on debit items and credit items. So the rate of interest is applicable for what date? That's why it is depending on the validity of the rate of interest is depending on the time. Because sometimes the rate of interest may be changing from time to time. That's why this is called time dependent terms. So let us do the step, and after the next step you can understand what are the links between reference rate of interest on interest indicator. See the step in the material. Define time dependent terms. SPRO, financial accounting, general ledger accounting, business transactions, bank account interest calculation, define time dependent terms. Click on new entries. Interest calculation indicator is equal to 36. Interest calculation indicator is equal to 36. Currency is equal to USD. Effective from 1/1/2016. Sequential number 01 means first term. Term is equal to credit interest balance interest calculation. You have to select from F4. Credit interest balance interest calculation. Credit interest means interest on debit items. Reference rate of interest is equal to A6. Reference rate of interest is equal to A6. Here, term is equal to, I said, credit interest balance interest calculation, right? Within brackets, select from F4. Within brackets, select from F4. Click on Save. Click on Next Entry button. Interest calculation indicator is equal to 36. Interest calculation indicator is equal to 36. Currency is equal to USD. Effective from 1/1/2016. Sequential number 02. Sequential number 02. Term is equal to debit interest balance interest calculation. Balance interest calculation means interest on GL account balances, right? Debit interest means interest on credit items of the term loan. Within brackets, select F4. Select from F4. Reference rate of interest is equal to A6. Same. Suppose if you have to use the different rate of interest on credit items, you might have defined one reference rate of interest for that particular rate. That reference rate of interest has to be assigned here. Click on Save. See the next step. Enter interest values. What is the actual rate of interest that we have to enter now? Path is same as above. Enter interest values. Why is taking this much time? Click on new entries. Reference rate of interest is equal to A6, valid from 1/1/2016, valid from 1/1/2016, interest rate 12%. Suppose if you are defined another reference rate of interest A7, for A7 you can assign 11% in the same way. So I told you, for every actual rate of interest, we have to define one reference rate of interest. For that reference rate of interest, we assign the actual rate of interest now in the system. Click on Save. See the next step, creation of interest account. Here, when the system calculates interest, the system itself has to post one accounting document, debiting interest account and crediting term loan account. So we have to create interest account and term loan account. We have an account group with the name interest. The defined number range is 4,400,000 to 4,499,000. So the interest account is to be created under that account group. That's why I am taking 4,400,000. Same procedure to create the GL account. Transaction code FS00. GL account is equal to 4,400,000. Company code 3499. Go to menu GL account create, 3699. Company code 3699. Company code is equal to 3699. Go to menu GL account create. Account group is interest. Account group is interest. Select P&L statement account. Select P&L statement account. Short text is equal to interest account. GL account long text is also interest account. Go to control data tab. Account currency USD. Select only balances in local currency. Select line item display. Sort key 001. Then go to create bank interest tab. Field status group G001. Click on Save. Now let us create term loan account. Term loan account is always part of secured loans. Here, this term loan account is to be created under secured loans, right? I am going to the account groups OBD4. Chart of accounts 3699. See, we have an account group secured loans. The defined number range is 1,300,000 to 1,399,000. So we have to create this account under this account group. So I am taking 1,300,000. GL account is equal to 1,300,000. GL account is equal to 1,300,000. Company code 3699. Go to menu GL account create. Account group is Secure loans. The account group is secure loans. Select balanced account. Select balanced account. Short text is equal to HSBC term loan account. Here we have, for each separate loan agreement, we have to maintain a separate GL account. It's a rule, you can take it granted. For every term loan agreement, we have to maintain one GL account. GL account long text is also HSBC term loan account. Go to control data tab. Account currency USD. Select only balances in local currency. Select line item display. Sort key 001. Then go to create bank interest tab. Field status group G001. Then interest indicator 36. I told you, for the interest indicator, we assign all the values necessary to calculate interest, and that interest indicator is assigned in the term loan account master record. Click on Save. Now, how the system understands the rate of interest to be applied on the term loan account, right? Go back to notes, please. Links in the interest calculations. Put heading links in the interest calculations. Links in the interest calculations. In the term, we have assigned, we have assigned the actual rate of interest. We have assigned the actual rate of interest (12%) to the reference rate of interest we have assigned the actual rate of interest 12% to the reference rate of interest A6. To the reference rate of interest A6. The reference rate of interest A6, put full stop, and the reference rate of interest A6 was assigned to debit interest and credit interest terms, was assigned to debit interest and credit interest terms under the interest indicator 36. Under the interest indicator 36. The interest indicator 36 was assigned in the term loan account master record. Was assigned in the term loan account master record. With the help of these links, the system will apply 12% on the debit and credit balance of the term loan. With the help of these links, the system will apply 12% rate of interest on the debit and trade balance of term loan account. On the debit and trade balance of term loan account. Now, look at the screen, everybody. In the step number 5, right, we have assigned the actual rate of interest 12% to the reference rate of interest. Look at the screen. See, in the step, enter interest values. See, for the reference rate of interest A6, we have assigned 12%, right? Then, in the time dependent terms, see, in the time dependent terms, you have defined two terms, right? 01, 02, right? So, we have linked A6 reference rate of interest to the credit interest under the interest indicator 36. Again, I am repeating. We have assigned the actual rate of interest 12% to the reference rate of interest A6. A6 was linked to credit interest under the interest indicator 36. Credit interest means interest on debit items, right? This interest indicator 36 was assigned in the term loan account, HSBC term loan account. So on the debit balance of HSBC term loan account, the system will apply 12%. Clear? Similarly, second term. Again, A6 was linked to debit interest, right? Debit interest means interest on credit items. We have assigned 12% to the reference rate of interest A6. This A6 was assigned to debit interest, that is interest on credit items. This link was provided under the interest indicator 36. So this 36 was again assigned in the term loan account master. So on the credit interest of the HSBC term loan account, the system will apply 12% again. This is the link. Right? I hope it is clear to everybody. So if you understand this, I will take you a little bit deeper into the configuration. For a while, I am stopping the sharing. Now again I will explain Giri, don't worry. See here, Giri, again I am explaining. We are assigning the actual rate of interest 12% to the reference rate of interest, right? The reference rate of interest was assigned to debit interest and credit interest terms under the interest indicator. The interest indicator is assigned to HSBC term loan account. These are the links. Right? Clear, Giri? Okay. Now, here we have taken 4 term loans, right? We have taken 4 term loans from 4 banks. HSBC Bank, American Express Bank, Citibank and ICICI Bank. So, as I said, For every term loan, you have to maintain one GL account. So the HSBC Bank is charging 12% rate of interest. American Express Bank is charging again 12% rate of interest. Citibank is charging 13%. Then ICICI Bank is charging 13.5%. Here it's a rule that for every separate rate of interest, we have to maintain one interest indicator and one reference rate of interest. So here only the identifications are different, nothing else. So 12% is assigned to reference rate of interest P1, and the P1 reference rate of interest will be linked to debit interest and credit interest terms under the interest indicator PQ, and the PQ is assigned in the HSBC term loan. So the HSBC Bank and American Express Bank, both the banks are charging the same rate of interest. In that case, we can assign the same interest indicator PQ in the American Express Bank loan account also. Then coming to Citibank. Citibank is charging 13%. So we maintain one interest indicator and one reference rate of interest. Then we assign the actual rate of interest 13% to the reference rate of interest P2. And the P2 will be linked to debit interest and credit interest terms under the interest indicator PR. And the PR will be assigned in the Citibank loan account. Similarly, for 13.5%, again we define another reference rate of interest and another interest indicator. After that, the actual rate of interest 13.5% will be linked to reference rate of interest P3. Then this P3 will be linked to debit interest and credit interest terms under the interest indicator PS, and the PS will be assigned in the ICICI Bank term loan account. These are the links of the values. But as far as configuration is concerned, first we define the interest indicator. After that, we define the reference rate of interest. After that, we define the time dependent terms. After that, we define we assign the reference rate of interest to actual rate of interest to reference rate of interest. If you understand this logic, you can configure for any number of term loans. Now, see the next step. Assignment of accounts for automatic postings. I told you, system itself has to post the entries automatically. For that purpose, we need to assign the GL accounts, right? Again, I'm stopping the sharing for a while. See here, when the interest is calculated by the system, the entry to be posted is interest account data to HSBC term loan account, $1,000. So this entry is to be posted by the system automatically by itself, right? Now, for the repayment of the term loan, every month 10,000 is the installment, right? So when the installment is repaid, the entry to be posted is HSBC term loan account data to bank, 10,000. So this entry is to be posted manually, or we can use the recurring document functionality. Okay, so this HSBC term loan, that is HSBC term loan installment amount 10,000 contains two parts. Some amount you have paid towards the interest, some amount towards the principal. Means what? You have paid interest and the principal. Means it implies two business transactions. What are those? Interest paid is one business transaction and principal paid is another business transaction. Each business transaction is identified with one symbol. So interest paid is identified with the symbol 0002, and the principal means term loan account, right? SAP calls this as GL account. So GL account paid is identified with the symbol 2000. So for the symbol 0002, we assign interest account, and for the symbol 2000, we assign the term loan account. Then the system automatically posts this entry at the time of calculating interest. This is called automatic account assignment. Transaction code OBV2. Click on symbols. So these are the symbols which were already created for all the interest related business transactions. So for the time being, our related interest business transactions are interest paid and GL account paid. So for this two account symbols, we have to assign the GL accounts. Click on accounts. Chart of accounts is equal to 3699. Click on enter. Account symbol 0002. That is interest paid. Currency USD. GL account is 4,400,000. GL account is 4,400,000. Then account symbol is 2000. 2000 means GL account paid. That is term loan account. Currency USD. Don't write. GL account 1,300,000. Term loan account. Now, we have taken, in our example, we have only one term loan account, right? So, you can enter only one term loan account. But in the real time, your client company is having 50 term loans, right? And when you calculate interest on 50 term loans, the system has to post 50 accounting entries, debiting like interest account data to term loan account number 1, interest account data to term loan account number 2. Means on any term loan, you calculate interest. Interest account is always debited, right? But the account to be created is respect to term loan account. Means when the system calculates interest on first term loan, interest account data to first term loan account. When the system calculates interest on second term loan, the entry to be posted is interest account data to second term loan, interest account data to third term loan, interest account data to fourth term loan, and the interest account data to 50th term loan. Right? So for that, what we have to do? Account symbol 2000, currency USD, GL account 1,301. Account symbol 2000, currency USD, GL account 1,302. Account symbol 2000 again, currency USD, GL account 1,303. Like that, you have to go on assigning 50 GL accounts for the same account symbol 2000. So do you have 50 lines here? No. Right? That's why instead of assigning the respect to individual GL accounts, we enter 10 pluses in the GL account number. So why 10 pluses? Because the maximum length of the GL account number is 10 digits. So when you enter 10 pluses here, the system will credit the respect to term loan accounts. This process is called masking of the fields. Click on save. Now the configuration is over. Let us post some end user transactions and I will show you how to calculate interest on the term loan account balances. See the step number 8. Term loan receipt F-02. Let us post the receipt of term loan F-02. According to our example, let us assume that we have taken the term loan on 1st January 2016. So document date is 1/1/2016. Document date is 1/1/2016. Type is equal to FCA. Company code 3699. Otherwise, you can post it today also, no problem. Posting date is 1/1/2016. Posting date is 1/1/2016. Period 1. 1st January means period 1. Currency USD. Posting key 40. Account is cash account. Cash account is to be debited. Account is 2,100,000. Click on enter. Amount is equal to 1,00,000. Business area 3699. Text being, after business area, you have the value date. Yes, value date. Look at the screen, everybody, please. Value date is 9/4/2016 is defaulted. What is the value date? If you remember, I told you it is the expected date of the realization of funds involved in the bank instruments. So if you keep the value date 9/4/2016 here, system understands that even though we have posted the receipt of term loan on 1st January 2016, the term loan check was collected on 9/4/2016. So the system will consider zero balances in January, February, March. So system will calculate interest only from 9/4/2016. That's why you have to change the value date. Value date is equal to 1/1/2016. Value date is equal to 1/1/2016. Text being term loan received. Text being term loan received. Posting key 50. In the case of receipt of term loan account is credited. So 1,300,000. Account is 1,300,000. Click on enter. Amount is asterisk. Business area 3699. Value date is equal to 1/1/2016. Value date is equal to 1/1/2016. Text being, or you can say simply text plus. Click on save. See the next step. Term loan installment paid. Let us assume the term loan installment is 10,000 and we have paid the first installment on 1st February. So that is to be posted. Transaction code F-02. Document date is 1st February 2016. I am entering in the format, Indian format date, month, year. Document date is 1st February 2016. Type is SA. Company code 3699. Posting date 1/2/2016. Period 4. Currency USD. Period 2. Period 2. And of course, even if you don't enter, system automatically changes the period based on the posting date. Currency USD. In the case of repayment of term loan account is debited and bank account or cash account is credited. So posting key 40, account is 1,300,000. Click on enter. Amount is 10,000. Business area 3699. Value date 1st February 2016. 1st February 2016. Text being first installment paid. Text being first installment paid. Posting key 50. Account is 2,100,000. Click on enter. Amount is asterisk. business area 3699, business area 3699, value date 1/2/2016, text plus. Click on save. So we have posted the term loan receipt and payment of one installment, right? See the next step, calculation of interest. This transaction code F.52 is for calculation of interest. So this transaction code is used by the end users at the end of every month, right? So before calculating interest, let us display the balances in the term loan account, just for your understanding purpose. FS tenant, GL account 1,300,000, company code 3699, fiscal year 2016. Click on execute. See, at the end of January, 1 lakh. At the end of February, 90,000. Let us see what happens after calculating interest. See, the closing balance of the interest as on 31st January 2016 is 1 lakh. So let us see what happens after calculating interest. Transaction code F.52. Chart of accounts is equal to 3699. GL account is equal to 1 to all nines, because I don't know how many number of term loan accounts are there on which interest is to be calculated. So in any case, you can give always 1 to all nines in the selection parameters. Company code 3699. Calculation period 1/1/2016 to 31st 1/2016. Under output control, select additional balance line. Means the system will display a separate line showing the total amount of loan outstanding including interest. Then select post interest settlements. Select update master record. Now put heading in the notes, please. Put heading interest calculations. Put heading interest calculations. Under that, interest calculations within brackets transaction code F.52. F.52. Under that, put heading update master record. Update master record. By selecting this indicator, the system will update two fields. The system will update two fields. The system will update two fields. In every term loan account master record, on which the interest was calculated and posted. They are: number one, key date of last interest calculation. Number one, key date of last interest calculation. 1 second. Break up. Break up. Okay, I am back. Number one, key date of last interest calculation. It is the date. It is the date. It is the date on which. Sorry. Key date of last interest calculation. No. Okay. It is the date up to which. It is the date up to which the interest was calculated. Up to which the interest was calculated and posted. Up to which the interest was calculated and posted. Number two. Number two. Date of last interest run. Date of last interest run. It is the date. It is the date on which it is the date on which the interest was calculated. So these are the two fields that are automatically updated by the system. So here I am selecting update master record, right? After calculating interest, I will take you to the master record and I will show you the updations. Okay, come back to material. Session name is equal to RFS ZIS 00. Session name means batch input session. So here also the system creates one batch input session. What is the batch input? It is a group of similar items for processing purpose, right? So this I explained you regarding batch input in the recurring documents. So here in the parameters, that is selection parameters, we have entered the GL account number 1 to all 9s. So between these two numbers, the system identifies all the terminal accounts on which interest is to be calculated. Then it creates one object combining all these terminal accounts. That object is called batch input. So how the system identifies the GL accounts on which interest is to be calculated? See, the system will select that GL account in which it finds the interest indicator. Because in every terminal account on which interest is to be calculated, we assign the interest indicator, no? So wherever the system finds the interest indicator, it will take up that account for the purpose of interest calculation. Clear? That's how system identifies. So for that batch input, system itself is giving one name, RFS ZIS 00. You can keep that name as it is, otherwise you can remove and you can give your own name. So for the time being, I am keeping the system defined name itself. Posting to business area 3699. Posting date of session 31/1/2016. Interest is to be calculated up to 31st January, right? Document date of session 31/1/2016. Click on execute. See, interest is 1019.18 on the credit balance. Closing balance including interest 1,01,019.18 on 31st January 2016. We have selected additional balance line, right? That is the effect of this selection. Here, calculation period 1/1/2016 to 31st January 2016. Value date balance 1 lakh credit, 31 days, because we are using Gregorian calendar. So here the system is only displaying the interest. Interest is not yet posted. The system is displaying only the interest calculation. Interest was not yet posted. To post the interest, we have to execute batch input session. See the next step. To post the documents by executing batch input session. Go to menu system, services, batch input, sessions. Select the session RFS ZS00. Click on execute process. Select display errors. Click on process. Here, after clicking on process button, please add text is equal to being interest for January 2016. Text is equal to being interest for January 2016. So this is the text for the debit line item, right? Text is equal to being interest for January 2016. Continue, please. Click on enter. Click on enter. This is the interest for the credit line item. Text plus. Click on save. See, processing of batch input session completed. Click on exit batch input. Now the interest document has been posted. See the material. To verify the term loan account balance, FS10N. Let us go to the term loan account balance display. Let us see what happens. GL account is equal to 1,300,000. Company code 3699. Fiscal year 2016. Business area 3699. Click on execute. See the balance on 31st January 2016, 1,119.18, including interest. See, 1 lakh term loan received, 1,019 being interest for January 2016. See the next step. To see the document posted, go to FB03. If you go to FB03, we can display FI document, right? If you go to FB03, the system takes the document number latest posted automatically. See, interest account data to HSBC term loan account. See the document date and posting date. 31/1/2016. See the next step. To verify the updations in the term loan account master record. I told you, no, the system will update 2 fields in every term loan account master record on which the interest was calculated and posted, right? FS00. GL account is equal to 1,300,000. Company code 3699. Go to menu GL account display. Go to create bank interest tab. See, key date of last interest calculation 31/1/2016 means interest was calculated and posted on this term loan account up to 31st January. This is for the information purpose of the end user. Date of last interest run 9/4/2016. On which date you have calculated interest? On 9th April. Like that, the user executes the transaction code F.52 like this. Let us execute the interest calculation for the month of February. Just to look at the screen, it is not there. Procedure is same. Chart of accounts 3699, GL account 12 all 9s, company code 3699, calculation period 1/2/2016 to 29/2/2016, leap year, business area 3699, select additional balance line, select post interest settlements, select update master record. You can change the session name, right? PQR1, posting to business area 3699, posting date of session 29/2/2016, document date of session 29/2/2016. Click on execute. See, interest was 867.80 credit interest. Interest on credit line items. And the value date balance is 91,019. Every month, the balance on which interest was calculated will be going on reducing. That's why this method is also called reducing balances method. This is the method followed by the banks to calculate interest on term loans. So we have to execute the batch input session SM35, or you can use the path. Select the session PQR1, click on execute process, select display errors only, click on process. Text interest being interest for February 2016. Click on enter. Text plus. Click on enter. Click on exit batch input. Now let us display the balance in the term loan account. See, cumulative balance as on 29th February 2016, 91,886. Out of which you pay second installment on 1st March. So 91,000 minus 886, 91,000 minus 10,000, right? Minus 10,000, 81,886. When you calculate interest for the month of February, right? Sorry, March, the system will calculate interest on 81,886. If you see the document, FB02, FB03. See, interest account data to HSBC term loan account 867.80. This is the document date and posting date 29/2/2016. If you see the updations in the term loan account master record, see, key date of last interest calculation 29/2/2016 means interest was calculated up to this date. Date of last interest run 9/4/2016. We have calculated interest for the month of January and February on 9th April itself. So this is the mechanism of calculating interest on term loans, right? Reversals. This we will see after 10 minutes break. Yes, I am back. Kalyan, are you there?
Yes, sir.
Okay. Kirti, are you there? Okay. Shailaja, Shailaja. Srinivas, Tahir. Okay. Tejasvi. Okay. Giri. Okay. Shailaja, are you there? Actually, there are 13 students in your batch, but only 8 people are coming. Anyhow, see, reversals. So, what is the function of the reversals in SAP? First, I will explain this. Reversals. The reversal function is used to reverse the error documents. There are 5 types of reversals in SAP. Sometimes by mistake, we may post some documents in a error status, right? In order to rectify them, we may have to use the reversals. So, first reversal, individual reversal. This function is used to reverse a single document only at a time. To reverse a single document only at a time. When the document is reversed, the system reverses the posting keys only. What is this? I will show you at the time of reversing. Then, reverse of reversal. This function is used to reverse a document which was already reversed. Mass reversal. As the name itself describes, this function is used to reverse a group of documents at a time. But once the documents are reversed, it cannot be reversed directly. We can do it in a indirect way. What is this again? Everything will explain you while doing the settings. Then accrual and deferral documents reversal. This function is used to reverse the accrual and deferral documents posted on the last day of the month. Then cleared item reversal. This function is used to reset the open items which were cleared. So these are the 5 types of reversals available in SAP. So the first 3 types of reversals I will show you now. Fourth type of reversal, we have the separate topic on that which comes immediately after this reversal. Then fifth type of reversal, I will explain you in accounts payable and accounts receivables. At the time of reversing the documents, the user can give the date on which, the user can give the date on which the reverse document is to be posted. If the user does not give any date, the system posts the reverse document as on the posting date of original document. Then, while reversing the document, the user has to specify the reversal reason. We can define our own reversal reasons in addition to reversal reasons which were already defined in the system. Means, for example, today we are reversing one document because of wrong posting. After 1 month, we are displaying the reversal document. in that case, the user should understand the reason why it was reversed, right? That is the reason why. At the time of reversing the documents, compulsorily the user has to enter the reason for reversal. That is called reversal reason. Already some reversal reasons have been created in the system, and if necessary, we can create our own reversal reasons. So how to create our own reversal reasons? I will show you in the next topic. Now, see the first reversal, individual reversal, FB08. Document number is equal to 2. Means I want to reverse document number 2. Company code 3699. Fiscal year 2016. See, a reversal reason. Reversal reason is a mandatory field. Look at the screen. Reversal reason is a mandatory field. So just like that, I am using reversal in the current period 01. We have to use one reason, right? Just like that, I am using 01. But based on the necessity why you are reversing it, right? Based on the reason why you are reversing it, you have to give that reason. If you don't find the reason in the list, you can create our own reversal reason. So, how to create our own reversal reason, I will tell you in the next topic. For example, otherwise you can also give incorrect document date. So, at the time of posting the document, we have given the wrong document date. So, the document date cannot be edited. That's why we are reversing it. So like that, based on the reason why you are reversing, right, you have to enter the reason. Then reversal, see, posting date. Suppose if you enter the posting date 9/4/2016, right, the reverse document will be posted with the today's date for the document number 2. Suppose if you don't enter any date here, the system will post the reverse document on the posting date of original document, that is document number 2. This is what I have given you in the material. So here I am not posting, I am not giving any date. Let us see what happens. And what is document number 2? We don't know, right? So if you want to see what is this document number 2, for example, click on display before reversal. See, salaries account data to cash. This is the document that is going to be reversed, and the posting date is 20th March 2016. So in the previous screen, we did not enter any posting date, right? So the system will post this reverse document of this document on this date. This I will show you after reversing. So click on display before reversal, observe the document, click on back arrow, click on save. See, document 23 was posted in the company code 3699. Let us display the document. See the material. Go to transaction code FB03 to display the reverse document. Always in FB03, we can display the reverse document. FB03. When you go to FB03, system takes the automatically the latest document number posted, right? See, salaries account has become 50 posting key. Salary for the salaries account, posting key has become 50. Means what? Salaries account was credited. And for the cash account, posting key has become 40. Means cash account is debited. This is what I told you. The system reverses only the posting keys, but not the order of the line items. The order of the line items will remain same. Only the posting keys will be reversed. And you see the posting date, 20th 2016. Right? This is how we can reverse any single document at a time. See the next, this thing, reverse of reversal. When do we use the reverse of reversal? I will tell you one scenario. Sorry. I will tell you one scenario. Actually, the user has to reverse document number 3, but by mistake, the user has reversed document number 2. In that case, we have to nullify the effect of the reversed document of document number 2. For that reason, you have to re-reverse the document number 23 now. Clear? So once the document is reversed, it cannot be re-reversed again in a direct way. But we have another transaction code. Reverse of reversal F-02. You can post the reverse of reversal in F-02 only. Go to menu document, post with a reference. Document number is equal to 23. Document number is equal to 23. Within brackets, give the document number to be re-reversed. Select generate reverse posting. Select generate reverse posting. Click on enter. Again click on enter. Click on save. See, document number 24 was posted in the company code 3699. Again, go to FB03 to display reverse document. See again, salaries posting has become 40, cash account posting has become 50. Means salaries accounted up to cash. And you see the date 20th 2016. Here in the real time, only the current period is opened. Right? So actually we have posted the document number 2 in the month of March. So according to real time requirement, generally what happens, only the current period is opened and all the previous periods are closed. In that case, in order to reverse the document posted in the previous period, first the previous period has to be opened. Otherwise, you cannot post, you cannot reverse. That's very important point you have to remember. Then, mass reversal. I want to reverse a group of documents at a time. Transaction code F.80. That is called mass reversal. Company code 3699. Document number 225 means I want to reverse document number 2, 3, 4, 5. 4 documents at a time. Fiscal year 2016. Here already we have reversed document number 2, but still I have given the document number 2 in the mass reversal. Right? Let us see what happens. Reversal reason 01. Select test run. So when you select the test run, the system will display what are the documents that are going to be reversed. Click on execute. See, documents which can be reversed. 3, 4, 5. What happened to document number 2? See, documents which cannot be reversed. 2. Why so? Document was already reversed. So you can reverse one document only once. It's not possible to reverse again. So observe the documents. Click on reverse documents button to reverse all the documents at once. Document number 3 was reversed with the document number 25. Document number 4 was reversed with the document number 26. Document number 5 was reversed with the document number 27. This is called mass reversal. And remember, there is no reverse of mass reversal. If you want to reverse the document which was reversed in the mass reversal, you can do it individual document wise only. Means you can re-reverse document number 25, you can re-reverse document number 26 or you can re-reverse document number 27. But you cannot re-reverse 25, 26, 27 at a time. So these are the three types of reversals. Now, my requirement is like this. Here, I have reversed document number 2 to 5, but sometimes I want to reverse document number 10, 13, 16, 20, 25. I want to reverse a group of documents with random numbers. Are you following how to do that? Here, you click on this multiple selection button, right? You can enter the document numbers here: 10, 13, 20, 25, 30, 32, etc. etc. You can reverse a group of documents with random numbers. Okay. Otherwise, I want to reverse document number 2 to 5, 15 to 18, 27 to 37. In that case, click on select ranges. 2 to 5, 15 to 18, 27 to 37. That's how you can use this multiple selection fields. Right? Now, see the next topic: accrual and deferral documents reversal. Accrual and deferral documents. I told you, we have the separate topic on the fourth type of reversal. Now I am going to explain you what is the deferral and accrual documents. See, what is the accrual concept of accounting? Put heading in the notes, please. Accrual concept of accounting. Heading is accrual concept of accounting. It is the process of accounting for all the expenses it is the process of accounting for all the expenses and revenues in the month in which they are incurred, in the month in which they are incurred and earned and earned and earned, even though they are not actually paid, even though they are not actually paid or received, even though they are not actually paid or received. What is this? Here I will explain. Here, what is the main purpose of maintaining the accounting books? Every businessman wants to know the results from his business operations. See, sometimes every business organization is very much interested in finding out the results monthly, quarterly, yearly. So, finding out the business results monthly is optional, right? But finding out the business results quarterly and yearly and half yearly is legally required. Means we have to prepare the balance sheet and P&L account quarterly, half yearly and yearly is legally required. But generally every management, they are very much interested in finding out the business results every month. That's why they prepare the financial statements every month. Financial statements means P&L account and balance sheet. Now, how do we know the business results? We have to compare the revenues of a particular month with the expenses of that particular month. If you want to know the profit for the month of April, what is the logic? What is the procedure we use? We compare April revenues with the April expenses, right? So the expenses and revenues are existing in the books of accounts only when you account them. Okay. So when do you account for the expenses? When you pay them actually. And when do you account for the revenues? When you receive them actually, right? But there are some expenses which are incurred in the current month but paid in the next month. Rent of April will be paid on 1st of May. Let us assume salaries we are paying to our employees on 1st of every month. So salaries of April will be paid on 1st of May. Now, I want to prepare the financial statements, P&L account and balance sheet for the month of April. April rent, when we are paying? On 1st May. So, according to the normal tendency, if you account for the expenses only when you pay, the rent of April is paid on 1st of May. Then you account for the rent of April on 1st of May. Then what is happening here? The rent of April is considered in the month of May. Then if you prepare the P&L account for the month of April, it will display the correct picture of profit? No. Similarly, the salaries we are paying on 1st of May relative to April. So in that case, the salaries of April are accounted in the month of May. In that case, again, if you prepare the P&L account for the month of April, will it display a correct picture of the profit? No. That's why, in order to recognize this type of expenses, we post some entries on the 30th April. Those entries are called accrual entries. So recognizing this type of expenses and revenues in the books of accounts is called accrual concept of accounting. Right? SAP explains these accruals and deferral documents in a different way. What is that? I will show you. See, in every business transaction, there are two aspects: service aspect and payment aspect. Means you give the services, you take the payment. Otherwise, you receive the services, you give the payment. You take any business transaction. Even the sale of goods can be considered as services. Every business transaction, service and payment. That's it. Give the service, take the payment. Or take the service, give the payment. Okay. Now, if the service aspect happens first, then the payment aspect. If the service aspect happens first, then the payment aspect, it is called accrual business transaction. Example, outstanding expenses, which is also called expenses payable, and outstanding incomes, which is also called incomes receivables. On 31st April, I am preparing P&L account and balance sheet. By this day, we have used the services of the landlord. Means already service aspect happened. But when you are making the payment on 1st May, as on a particular date, service already happened. After that, you are making the payment. Salaries. By 30th April 2016, already we have used the services of the employees. But when you are paying 1st May, nothing but accrual business transaction. These are also called outstanding expenses and outstanding revenues. Clear? If anybody wants, I will explain again. Then, if the payment aspect happens first and okay, Giri. See, if the service aspect happens first, then the payment. That is called accrual business transaction. You consider 30th April 2016. As on 30th April 2016, we are preparing P&L account and balance sheet. By 30th April 2016, already we have used the services of the landlord. What is the rent payment? we use the services of the landlord and you make the payment, right? So by 30th April 2016, already we have used the services of the landlord for which you are making the payment on 1st May. You consider the cut-off date as 30th April 2016. As on 30th April 2016, already service happened first. But when you are making payment, 1st May. So service aspect happens first, then the payment. This is called accrual business transaction. Clear with Giri? Now, if the payment aspect happens first and then the service aspect, then it is called different business transaction. Example, prepaid expenses and incomes received in advance. Suppose, for example, we have taken one insurance policy, stock insurance. You have paid a premium of $12,000. The tenure of the policy is 1/1/2016 to 31st December 2016. Sorry, 31st December 2016. What is insurance? Remember, insurance is a contract. Always, insurance is a contract between your company and insurance company, whereby the insurance company has agreed to cover your company against any loss that may occur due to the happening of some unexpected events. That is called insurance. So the insurance company has agreed to protect your company against any loss from a period of 1st January 2016 to 31st December 2016 for 12 months, for which you have paid a premium of $12,000. So what is the premium per month? $1,000. Okay. Now, as on 30th April, we are preparing P&L account and balance sheet. By 30th April 2016, for how many months we have used the services of the insurance company? January, February, March and April. Only 4 months. But already you have paid for 12 months. Still, we have to receive the services from the insurance company from 1/5/2016 to 31st December 2016. That is for 8 months. But already you have paid. So in this case, payment already happened, but still services are to be received. Payment happens first, then the service. It is called deferral business transaction. Example, prepaid expenses. This is insurance prepaid. So whether it is the accrual expenses or accrual revenues or prepaid expenses or incomes received in advance, according to accrual concept of accounting, we have to post some accounting entries. They are called accrual entries. Clear for everybody? Now, on 30th/4/2016, we are preparing P&L account and balance sheet. So by 30th/4/2016, we have incurred rent but not paid. In order to recognize that rent into books of accounts, we post one accounting entry. Rent on 30th April 2016. Rent account debtor 10,000 to outstanding expense account. Actually, we did not pay. So there is no involvement of cash. Cash is not going out of your firm. That's why instead of cash account, you credit some other account, outstanding expense account or expenses payable account. By virtue of this entry, your account, rent account, is debited as on 30th April 2016 itself. So, if you prepare P&L account, it will display a correct picture of the profit. But did you pay actually? No. You have to pay. So, you have to pay as on 30th/4/2016. So, as on 30th/4/2016, it's a liability. So, this outstanding expense account is displayed on the liability side of the balance sheet prepared on 30th/4/2016. This is how the entries are posted in the normal accounting or in the non-SAP environment. Then on 1/5/2016, you have paid rent. In that case, the entry we post is outstanding expense account data to cash, because this liability is cancelled. This liability is clear, right? That's why outstanding expense account is debited. To cancel credit, always you have to debit. Similarly, to cancel debit, always you have to credit. So, outstanding expense account data to cash. This is how the entries are posted, right? See, outstanding expense credited here, outstanding expense account debited here. Ultimate result is rent account data to cash. This is how the entries are posted in the normal account. How the entries are posted in SAP. On 30th/4/2016, the first entry is same. Rent account data to outstanding expense account. So you prepare P&L account and balance sheet on 30th April. Your purpose is over. Now you reverse them on 1st May. As on last day of every month, in our example, as on 30th April 2016, number of accrual entries are posted. In our example, I have posted only one accrual entry. Remember, in the real time, hundreds of accrual entries are posted on the last day of every month. After preparing the financial statements for the month, all the accrual documents are to be reversed on the 1st of next month. This is called accrual reversal. So on 1/5/2016, outstanding expense account data to rent account. This is called accrual reversal. The above entry is reversed. Again, for the actual payment of rent, you post rent account data to cash. Let us actually, this type of entries also we can post in SAP. Okay, but for this purpose, we need some other settings from the accounts payable side. What is that accounts payable side setting? I will discuss in accounts payable, which we start tomorrow. Okay, but at this point of time, I am going to show you how to post this type of entries. See the first step in the material. Creation of GL master, outstanding expense account, as open item management account. This is the first account which we are creating on the basis of open item management. So first let us create the GL account, then I will explain what is the meaning of the open item management. Outstanding expense account is part of our current liabilities and provisions, right? So this account is to be created under current liabilities and provisions. We have an account group. Current liability. We have an account group, current liabilities and provisions. Chart of accounts 3699, right? See, current liabilities and provisions. The defined number range is 1,500,000 to 1,599,000. So I am taking 1,500,000. Transaction code FS00. Creation of GL account master account. GL account is equal to 1,500,000. Company code 3699. Go to menu GL account create. Account group is current liabilities and provisions. Account group is current liabilities and provisions. Select balanced account. Select balanced account. Short text is equal to outstanding expense account. Short text is equal to outstanding expense account. GL account long text is also GL account long text is also outstanding expense account. Go to control data tab. Account currency USD. Select only balances in local currency. Select operator management. Select operator management. Select line item display. Sort key 001. Sort key 001. Go to create bank interest tab. Field status group G001. Click on save. See, for this account, you have selected operator management. Open means what? Open means pending items, right? See, operator management. If any GL account is maintained on the operator management, then we can display the items which are pending for payment or the items which are pending for receipt. That is called open item. We can manage only the balanced accounts on the operator management. Means if something is pending to be paid, it is called liability, right? Liability means balanced item. If something is pending to be received by you, you have rendered some services, but still you have to receive the payment for that. You have to receive means asset. No, Giri, because you are facing little bit internet problem, because others are comfortable with my voice and the display of the objects. It seems that you are facing little bit internet problem, right? Anyhow, when you are going to listen to the recording, you don't face any problem. So if something is to be received, if something is pending to be received, that is called asset. Asset means balanced item. So in any case, whether it's a item pending to be received or to be paid, it's a balanced item. That's why we can select the operator management only for balanced accounts. Suppose, for example, if you select operator management for pre-P&L account item, it will not accept. System will not accept. Try to create one expense account and select operator management. So the system will give the error message. For the GL account which is managed on the operator management, we can display only open items. The items which are pending for payment or the items which are pending for receipt. Similarly, or only cleared items. The items on which the amount was paid or the items on which the amount was received, or all items. We can display both open items and cleared items in one screen itself. That is the meaning of the operator management. See that the second step, to create a reversal reason. I told you, we can create our own reversal reasons. Now I am going to show you how to create our own reversal reasons. Path is SPRO, Financial Accounting, General Ledger Accounting, see, generally, this operator management is required for those GL accounts which requires clearing. Like all expenses payable accounts, expenses paid in advance account, that is prepaid expenses. Then incomes receivable account and incomes received in advance accounts. For these 4 GL accounts, we maintain operator management generally. And sometimes there are some taxes which are payable. Suppose, for example, TDS, tax deducted at source. TDS payable on contractors. That is also to be managed as operator management, right? Generally, expenses payable, expenses receivables, incomes receivables, and incomes received in advance. These are the GL accounts for which you have to select operator management. Okay, Srinivas. Yeah. Business transactions, adjustment, posting and reversal. Define reasons for reversal. See, already 13 reasons, 14, 15, 16. 16 reasons have been created, right? For every reason, we have to give one number or identification. It can be a number or alphabets or combination of both. I want to use the number. As far as number is concerned, already number 13 was used. So we can use any number after 13. Click on new entries. Reason is equal to 14. Reason is equal to 14. Text. Reversal for accrual transactions. Reversal for accrual transactions. Select negative posting. Select alternate posting date. Select alternate posting date. Suppose if you want to get another reversal reason, 15. Give some other identification like that. You can go on creating any number of reversal reasons. One second. Yes. Click on save. So we have selected negative posting and alternate posting date. What is the impact of selecting negative posting? You know that if you select a negative posting, we can reverse the documents, right? That you know. Then alternate posting date. What is this? Put heading in the notes. Creation of reversal reason. Creation of reversal reason. Under that, alternate posting date. Under that, alternate posting date. It is the date. It is the date on which the reverse document is to be posted. It is the date on which the reverse document is to be posted. By selecting this indicator, the system allows the user to reverse the document, no. The system allows the user to post the reverse document. Say, after the system allows the user to post the reverse document, on a date, other than posting date of the original document. On the other than the posting date of the original document. Means what? Here, look at the screen. We have posted the accrual document on 30th for 2016, right? This document is to be reversed on 1/5/2016. So 1/5/2016 is called alternate posting date. So when you select this indicator, with that reason, the system allows the user to post the reverse document on the date which is different from the posting date of original document. Clear? Next, posting of accrual document. Transaction code FBS1. Generally, these accrual documents are posted always on the last day of every month. FBS1. If you observe, this transaction code FBS1 is very, very similar to F-02 screen, except for these two additional fields. Document date is 9/4/2016. Sorry, 30th 4, last day, no? 30th document date is 30th 4/2016. Type is SA. Type is equal to SA. Company code 3699. Company code 3699. Posting date 30th 4/2016. As I said, generally the accrual documents or deferral documents are posted on the last day of every month. Period 4. Currency USD. Reversal reason 14. This is what we have created just now. Then reversal date is 1/5/2016. All the reverse documents which are posted on 30th April are to be reversed on 1/5/2016, 1st May 2016. Other things are as usual. Posting key 40. Account is 4,300,000 rent account. Click on enter. See, it is giving a warning message. Check document date is in future. Actually, today is 9th April, but we have given the document date and posting date as 30th April. That is why it is giving the warning message. But in the real time, we don't get any warning message because these documents are posted on 30th April. So in our training class, ignore the warning message. Ignore the warning message. Amount is 10,000. Business area 3699. Text being rent for the month of April 2016 provided. Text being rent for the month of April provided. Posting key 50. Account is 1,500,000. Outstanding expense account. Click on enter. Amount is asterisk. Business area 3699. Text plus. Click on save. Now see the next step. Display GL account items. FBL3N. GL account is 1,500,000. Company code 3699. Select the open items. See here, if you want to display open items, you select open items here. If you want to display cleared items, you select the cleared items here. If you want to display all items, select all items. That's it, right? So I want to display open items. That's why I have selected open items, means pending items. Select the open items. Open at key date. On which day you want to see the status? 30/4/2016. Open at key date is equal to 30/4/2016. Click on execute. Observe the status of the document. See 10,000. See the status. Open means pending. So this 10,000 is pending. Why? Being rent for the month of April 2016 provided. We have provided for the rent of April 2016. We did not pay. You have to pay. That is the use of this open item management. What are the items pending for payment? Rent for April 2016. This is called open, right? Red color means open. Green color means cleared. See the next step. Reversal of accrual document. F.81. Company code is 3699. Document number is equal to 1 to all 9s. I don't know how many number of accrual documents we have posted on 30th April. Document number is equal to 1 to all 9s. Fiscal year 2016. Select test run. Click on execute. See, the system will display all the documents which are going to be reversed. Observe the documents. Observe. Go back. Reset test run. Click on execute. Here we have only one reverse document. So only one reverse document is, sorry. deselect test run, click on execute. See, we have only one document, document number 28. So it says that the system says that document 28 is going to be reversed. After reversal, let us see the status again. Go to transaction code FBL3N to display the document status in the outstanding expense account after reversal of accrual document. GL account is equal to 1,500,000. Company code 3699. Select to open items. Open key date 1/5/2016. After reversal means 1/5/2016. Click on execute. See, system says no items selected. What are the no items? No open items. Means there is no any open items on the in the GL account 1,500,000. See the material again. Select the cleared items. Select the cleared items. Click on execute. See, document number 28 was cleared with the document number 29. See, document number 28 was cleared with the document number 29. You see the status cleared means green. So what is this document number 28? Let us see. Go to FB03, give the document number 28, enter. Rent account data to outstanding expense account. So in the document number 28, a liability was created. Any doubts for anybody? In this document number 28, a liability was cleared, right? In the document number 29, the liability was cleared. In the document number 28, liability was created. In the document number 29, liability was cleared. So, just now we have reversed the document and immediately we are displaying. After 2 months, right, I am displaying these two line items. In that case, how can I know that the liability in 28 document was cleared either by payment or by reversal? Remember, a liability can be cleared either by reversal or by payment. Do you agree? If anybody is having the doubt, let me know. I will tell you why. A liability will be cleared either by payment or by reversal. Okay. In this case, how the user understands that the liability created in the document number 28 is reversed by either payment of liability or by reversal of liability? I think everybody has got my point. For that, we use the document type AB. Document type AB means reverse document. So by identifying the document type AB, right, the user can understand that, okay, this liability was cleared by reversal but not by payment. If the liability was cleared by payment, the document type will be KZ. What is the document type KZ? We will discuss in tomorrow's class. See, look at the screen. I am taking you to the document types. OBS 7. SA. See, document, reverse document type AB. This is the use of the document types. Right? Please write down the material. Document type AB represents the reverse document. Document type AB represents the reverse document. So with this, our general ledger accounting is over, right? So tomorrow we start accounts payable, and I have sent the accounts payable material last week with the last week recording itself. If anybody did not receive the accounts payable material, let me know. I will send the accounts payable material. Kalyan, do you have any questions? Okay. Kirti? Okay. Shailaja? Srinivas? Okay. Okay. Okay, Srinivas. I think Srinivas Yalamanchi, Srinivas, another Srinivas is there. Okay. I think both the Srinivas are okay. Okay, thank you. Tejasvi, do you have any questions?
Sir, actually, I missed part of the class because of the net connection, but I will listen to the recording and I will speak to you.
Okay, 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 Tejasvi. Giri, Giri. Okay. Srinivas Akala, any questions? Srinivas Yakala. Okay. Okay, then good night and good day. See you tomorrow same time.